How does a nation of under 400,000 people, a relatively small population on the global stage, isolated in the North Atlantic, seemingly distant from major economic hubs, consistently outperform much larger, more established economies? What are the secrets to their success? Welcome to the Icelandic paradox. Let's delve into the factors that contribute to this fascinating economic phenomenon. In the past 18 months, a period marked by global economic uncertainty, while global giants struggled to maintain their footing, facing unprecedented challenges, Iceland demonstrated remarkable resilience, showcasing its ability to adapt and thrive. This was achieved through strategic resource management and forward-thinking policies. The country faced high inflation, a common challenge in the current global climate, a tight labor market, putting pressure on wages and productivity, rising interest rates, implemented to combat inflation, and a volatile tourism sector, susceptible to external shocks and changing travel patterns, all impacting daily life for the average Icelander. Yet, Iceland's core economic drivers, the pillars upon which its economy is built, renewable energy, a sustainable and abundant resource, skilled labor, a highly educated and adaptable workforce, and robust exports particularly in the fishing and aluminum industries, remain strong, providing a solid foundation for growth. The central bank and government walked a tightrope, carefully balancing competing priorities, curbing inflation without stalling growth, a delicate balancing act. Iceland's experience shows, offering valuable insights for other nations, how small, agile economies with the ability to adapt quickly to changing circumstances can leverage unique assets to weather global storms, turning challenges into opportunities. In this analysis, we'll break down Iceland's GDP drivers, examining the key sectors that contribute to its economic output, sectoral strengths, identifying the industries where Iceland excels, and looming risks, acknowledging the potential challenges that lie ahead. We'll also explore the policy moves, the strategic decisions made by the government, needed to secure long-term stability, ensuring a prosperous future for Iceland. Iceland's story is more than numbers. It's a narrative of innovation and adaptation. It's a lesson in building resilience, demonstrating how to overcome adversity on the edge of the world. Iceland faced a significant economic challenge in 2024, with stubborn inflation proving to be a major hurdle. The nation grappled with rising prices and the need to maintain economic stability. Inflation peaked at nearly 6.8%, creating considerable pressure on households and businesses alike. A key driver was strong domestic demand, coupled with consistent wage growth and the relentless rise in housing costs, particularly in urban areas. These factors collectively fueled the inflationary problem. In response, the central bank implemented a strategy of high interest rates, pushing them to a significant 9.25%. This move was intended to cool down the overall economy, but it also resulted in higher borrowing costs for both businesses seeking loans and households managing mortgages. Consequently, private consumption experienced a slowdown, and numerous construction projects were stalled or delayed. Despite these challenges, the unemployment rate remained relatively low, hovering just above 3%. Recent wage hikes, stemming from new labor agreements, provided a boost to incomes, but they also carried the risk of potentially fueling a wage price spiral, further complicating the inflation issue. The housing market, particularly in Reykjavik and surrounding areas, continued to be characterized by tight supply and high prices, with government initiatives aimed at increasing housing supply struggling to keep pace with the ever-growing demand. The inherent volatility of the tourism sector introduced yet another layer of economic risk, as unforeseen natural events and shifts in global travel trends could rapidly impact tourism revenues and related employment. The existing infrastructure struggled to adequately support the increasing number of visitors, placing significant pressure on various facilities, ranging from airports and transportation networks to popular natural attractions. Policymakers were confronted with a delicate balancing act, requiring them to effectively manage inflation, foster sustainable economic growth, and proactively address the persistent pressures in both the housing and tourism sectors. The government's strategic response encompassed targeted construction policies designed to alleviate housing shortages, alongside substantial investments in critical infrastructure projects. Despite encountering these considerable headwinds, Iceland's underlying economic fundamentals remained remarkably strong and resilient. This period served as a real-world test case, demonstrating the importance of policy agility and overall economic resilience in the face of adversity. Ultimately, Iceland emerged from this challenging period with valuable lessons that hold relevance for small economies around the world. Despite challenges, Iceland's economy grew by 3.4% in 2024, outpacing many European peers. The main driver? Exports, especially tourism, which brought in over 2 million visitors and vital foreign currency. Private consumption slowed due to high interest rates, but business investment, especially in energy, tech, and fleet upgrades, remained strong. Government spending on infrastructure also helped stabilize growth. Fiscal discipline kept debt manageable, with the debt-to-GDP ratio falling to 62%. By early 2025, inflation was easing, unemployment stayed low, and the current account remained in surplus. The central bank prepared to gradually lower rates as inflation cooled. Iceland's data tells a story of an economy that bent but didn't break. Strategic policy and sectoral strength kept the country on track. Tourism has emerged as Iceland's leading economic driver, now contributing over 8% to the nation's GDP. It also accounts for a significant third of all export revenues, showcasing its importance. Airlines responded by expanding their routes and businesses, ranging from hotels providing accommodation to tour operators offering excursions, thrived during this visitor boom. The fishing industry, underpinned by sustainable quotas and the latest cutting-edge technology, continues to be a global model for responsible practices and a stable economic pillar for the country. Companies such as Marel are exporting Icelandic expertise and innovation worldwide, ensuring maximum value is derived from every single catch. The energy sector presents yet another significant advantage, with nearly all of Iceland's electricity generated from renewable geothermal and hydropower sources. This has been instrumental in attracting energy-intensive industries like aluminum smelting, as well as modern data centers. The availability of cheap green energy acts as a powerful magnet, drawing in foreign investment and fostering the growth of innovative new tech ventures. Construction activity mirrored the nuanced state of the economy, with commercial projects experiencing a significant boom, while high interest rates contributed to a slowdown in residential building. Recognizing this, the government is actively streamlining permit processes and providing support for affordable housing initiatives to address existing shortages. As interest rates gradually ease, a rebound in residential construction is anticipated. These key pillars, tourism, sustainable fisheries, renewable energy resources, and a dynamic construction sector, collectively form the backbone of Iceland's productivity. Working in concert, they are the engine that drives economic growth and ensures long-term resilience. The Reykjanes volcanic eruptions tested Iceland's crisis management. Grindavik was evacuated, the Blue Lagoon closed, and local industries disrupted. Authorities acted fast, protecting lives, supporting displaced residents, and shielding critical infrastructure like the Svartsengi power plant with rapid engineering. Economic support packages helped businesses and homeowners weather the storm. Tourism adapted, turning the eruption into a new attraction, while fishing companies relocated to minimize export disruption. By early 2025, the situation stabilized with minimal national economic fallout. Iceland's response showcased its deep resilience and ability to turn crisis into opportunity. This adaptability is a core strength of the Icelandic model. Looking ahead, Iceland faces global and domestic risks. A downturn in North America or Europe could hit tourism hard, while global commodity swings and financial shifts threaten exports and currency stability. Domestically, inflation could resurge if wage pressures persist, and infrastructure strains from rapid tourism growth remain a concern. The top priority: bring inflation back to target and normalize interest rates, supporting households and businesses. Fiscal discipline and vigilant monetary policy are essential for stability. Long-term, Iceland must diversify beyond tourism, fishing, and energy. Policy should nurture tech, creative industries, and green innovation, leveraging the educated workforce and renewable resources. Expanding the green energy value chain and supporting new sectors like data centers and biotech will build resilience. Infrastructure investment is crucial to sustain growth and quality of life. Iceland's future depends on smart policy and continued adaptation. Iceland's recent economic journey is a masterclass in resilience. Despite inflation, high rates, and volcanic disruption, the country maintained growth, low unemployment, and fiscal health. The Icelandic model, natural resources, skilled people, and strong institutions, proved its worth. Challenges remain. Inflation, housing, and sustainable tourism need ongoing attention. But Iceland's adaptability is its greatest asset, turning crises into opportunities. For investors, Iceland offers growth, stability, and a strong ESG profile. As global conditions stabilize, Iceland is poised for continued success. The so-called Icelandic paradox is really a blueprint for thriving on the world's edge. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.